Welcome to the Point of No Return podcast, a show at the intersection of technology and strategy. On this show, we interview industry leaders and experts to better understand how they think about strategy during this time of exponential progress.
Hey everyone, welcome to the Point of No Return podcast. Today's a very special show. I had the pleasure of speaking with Chris Arsenault, managing partner at iNovia Capital. Chris is a super busy guy, as you can imagine, running one of the most important venture capital firms on the continent. And I have to say he was very generous with his time and his insights. So I really hope that you guys enjoy this episode. A little bit of background on Chris. If you don't know, he's a senior exec with over 20 years of management experience in high-tech industries, with extensive experience in business development, strategic planning, sales, marketing, communications, and really he's just a polymath that knows a bunch about a bunch of different areas. He co-founded and he's the president and CEO of iNovia Capital, which was launched in 2007 with over $500 million under management. He serves on a litany of different boards with some very familiar names, AppDirect, Lightspeed, Polka, Snap Travel, Well.ca, and up until recently, Luxury Retreats. He's an active board member of Réseau Capital and a proud charter member of Silicon Valley-based C100. We spoke about how he launched iNovia more than 10 years ago, the role that mentorship has played in his career, the most important characteristic that he looks for in an entrepreneur, what it takes to build a successful VC firm. And this was a very interesting part of the conversation. We spoke about crypto a little bit and how this fits into the larger trend of decentralization. We didn't speak about it, but if you have time, check out Chris's Thesis on Optionality, which is a fascinating read and a very timely subject as well. Chris really is a legend in the Canadian venture capital landscape. I always walk away inspired after talking with him, and I really think that you'll enjoy today's show. Chris, thanks for being on the show.
Thank you for having me.
I appreciate you taking the time. I realize you have a very busy schedule, so it's very much appreciated that you take the time to sit down and chat.
Thank you for coming.
In your new offices, I don't think I've visited your new offices since you guys moved.
They're pretty cool.
Yeah, it's pretty cool actually. Yeah, the whole space around what Caisse de Dépôt has done here is kind of neat.
Yeah.
As the first question, maybe a personal one. I know you've spoken about this, but how have mentors helped you in your career?
So when I built my first company back in the mid-90s, which was a software company, and we started touching the internet in the early days, I had no mentors. And that story that basically launched me into, what I'm doing today, but from an entrepreneur perspective, is basically my biggest success, but also my biggest failure. And when I'm backing today entrepreneurs that look a lot like what I was when I was in my early 20s, the big difference today is that the same type of entrepreneurs actually have mentors early on in their careers, and I didn't. And that's why my personal biggest success is also my biggest failure, because I could have done so much better. Today, I have a mentor. I had multiple mentors since early 2000, and it has served me well, and it's serving also portfolio companies well. So we highly recommend coaching and mentoring to all of our CEOs and executive teams. This is something that you cannot go wrong.
How do you feel that being an entrepreneur has helped you be an investor? And you mentioned mentorship. I'm guessing that's a part of it. And do you feel that it's a prerequisite today, if you want to be a good investor, that you've been on the other side of the table?
I'm biased, so my answer is yes. But at the same time, just look at the numbers. Venture returns in the 90s and in the early 2000s do not compare with the venture returns over the last 5 to 10 years. And what is different is that over the last 5 to 10 years, most of the funds that have been created are all entrepreneurial driven or operator led. So the model of Silicon Valley of actually having investors, yes, that have, financial backgrounds and everything else, and you can have a mix in a team, and the mix is very important. Having people that actually understands the stress, the opportunities, the challenges, the risk, when they're investing in a company, changes the whole relationship that is built between the investor and the entrepreneur. So an entrepreneur has the choice of choosing which type of investor they want to bring into their company, because it is a marriage. And interestingly enough, if I just look at the average marriage in Quebec, it's shorter in real life than the number of years you'll be in a relationship with your investor. Okay, so
a good stat.
It's a very interesting stat. So choosing the right investor means choosing an investor that understands what you're going through, what you're going to go through, and your business. So if you have an investor as an entrepreneur on the other side of the table and is basically trying to learn more than bring you value, even in the due diligence phase before actually committing to invest, that's not the type of investor that you want. You want an investor that actually understands what you're going through, and most importantly, what you're going to go through. Therefore, they can bring insights, soundboarding, and relationships that otherwise the investor would not be able to.
I know this is kind of the Monday morning quarterback question, right? You mentioned having good success and failures in your 20s. What would you have liked to have known back then that you would have maybe done differently?
It's just that if you don't have the right investors and if you don't have a mentor, there's only so much that you know. So the first challenge is realizing what you don't know. And because you need to be so high on self-confidence to attract capital, to attract talent, to actually build a business from scratch, that you kind of lose yourself in the process. So having that type of mentorship and having that type of senior advice around the table from your investors basically allows you to first understand what you don't know, and second, how not to panic when something pops up. There's a crisis, you just lost your top sales VP to a competitor, you just lost a big contract, the technology is not working, there's a big shift in the industry. Not panicking is like rule number one. And sadly, most people panic. Why? Because they've never been through it before. So if you have people around you that's been through this type of stress, then guess what? You can deal with the situation much better. And if your competition don't have that, then guess what? You're ahead of your competition as well, because they're going to be going through the same things as you are.
And so I know you mentioned this in the past of your own way to handle stress. I know you do meditation, for instance.
Yeah.
Is that something that you advise your founders to do, or is there other ways that you advise them to cope with immense pressure that they're under?
So coping with pressure is different depending on the people. Meditation for me is by far the best tool that I've found over the last few decades, and it's been less than a decade actually. So this is something that is new for me for maybe 5-6 years now, and is paying off big time. So do I recommend it to all of our entrepreneurs and other people? Absolutely. I recommend it to my friends, and I got my kids involved as well, right? But for other people, it's going to be sports. Other people is going to be gym. Other people is going to be just realizing that there is a balance between your ability to focus, drive, and give 100% of yourself, and the ability to recuperate. And once you realize as an entrepreneur that it's not the amount of work that makes a difference, it's how you go by it. Working smart outweighs all the time working hard. So when you're able to have both, then guess what? You're above the crowd. But recognizing that is definitely a challenge that you try to identify in the entrepreneurs that you back, to see if that is a problem, and make sure that it's being addressed up front. And sometimes it's going to be, the life balance, personal life, family life, professional life. Sometimes just your work ethics in terms of how you're working. And other times it's just going to be adding meditation or sports or just going to the gym on a regular basis. But in all cases, you have to recognize that you have to manage that stress, and you have to be able to recuperate. If you don't recuperate, you're like any other athlete in the world, you will hit a wall.
Yeah, that's very good feedback, and I find I wrestle with this as well on my end. And I've tried meditation. I find sports has worked better for me.
Yeah.
So I want to go back to the inception of iNovia and talk a little bit about the firm that you've built over the past decade. Maybe a simple question: what led you to starting the company?
So iNovia is the outcome of a few years in the investment side of the business, because I joined Charles Sirois in his ecosystem and hub of companies and investments right before 2000, and stayed for a few years, and from there helped launch a university accelerator fund called MSBI. And iNovia is basically the outcome of the years of experience as an entrepreneur, attracting funding, failing and succeeding. Also the years as an investor, part of the family, creating spin-offs or investing in companies with the Sirois constellation, and starting a fund from scratch, which was the accelerator fund, and basically taking all of the learnings and saying, okay, so if we were to build a venture capital fund that supports entrepreneurs that will build the next billion-dollar company, what would it look like? Well, it should look like X, Y, and Z. And the X was actually attracting talent for an entrepreneur in a business is extremely important. Same thing for a fund. Building a brand in order to attract the best deal flow is important as much as it is for a company in order to attract their customer base. Scaling your business and growing over time and having a long-term vision over 1 or 2 decades is extremely important for an entrepreneur. Same thing for a VC fund. So the iNovia brand, the iNovia team, everything was built according to those 3 rules, if you want. And I had the opportunity of having met François Gauvin, who's partner and CFO here, that helped launch iNovia when he was before that at Bell Canada and Teleglobe, and then Le Fonds FTQ. And then I met up with Sean Abbott in the earlier days as well. And when it was time to actually launch iNovia, Sean, who's based out west, who's a co-inventor of the USB key, angel investor, great mentor for the entrepreneurs that he had been backing. He was just a natural fit. So the chemistry was there, and that's what's basically, that chemistry, that quality of talent is what kickstarted, what is now iNovia, and this is back in 2007. So we're on our 11th year now.
And has the original vision changed or shifted somewhat, or how has it grown?
No. Like, the vision was to how do we build a top tier VC that will be part of the first half of the top quartile, which at that time in 2007 was 100% California based. How do we build this type of firm being headquartered in Canada? So then it was a question of, can we attract capital? Can we attract talent? Can we attract the entrepreneurs that have the ambition of building these type of companies in Canada, outside of Canada? So we have a mixed strategy. We're a North American fund. We're an early stage investor, but at the same time, we will be there in the later stage rounds as well. So we're not a seed stage investor that puts in X number of dollars and, puts dollars in more than less companies and just hopes for the best at the end of the day. We're there at every step. When JP Morgan put in $110 million in AppDirect, we were in the closing documents. We participated in that round. I'm still a board member on that company. When Lightspeed does the transaction with La Caisse de Dépôt, we were part of structuring that transaction. We are still on the board helping the company go to the next phase. So we're basically from the early days to what will be eventually an exit. And sometimes the exit happens sooner, and other times it's a long path, and we're long-term thinkers. So the vision of the fund, the vision of of our relationship with the entrepreneurs, and how we help build what will become multi-billion-dollar companies with a big S, has not changed. The landscape has evolved. The ambition behind the entrepreneurs that we've been backing has been increasing. The competitiveness of Canadian entrepreneurs on the global landscape has more than 10x'd. So the markets are collaborating with our vision. So even though we are sticking to our vision from 11 years ago, and we're adding capital and we're able to lead $40 million rounds. Well, we couldn't do that in 2008, but today we can, because we have the attractiveness power of bringing in LPs and other investors into our companies on the terms and conditions that we're setting with the entrepreneurs, right? So we've evolved, obviously, but we kept to the same vision, and the markets have been collaborating with us, and the entrepreneurs are just amazing. So, if it wasn't for the caliber of people that we're able to attract in our portfolio, we would be nowhere near achieving that vision. Right now, 10 years into it, we're in a pretty good shape.
Yeah, it sounds like you said, it's very admirable that the vision is stayed the same, but your impact has been significant, and I could attest to that, having seen it in this market. You spoke of the 10x, and I think it's truly something that you guys really personify. What do you feel is the most important character trait when it comes to the entrepreneurs that you guys are looking for, right? Because you said that's the most important aspect. It's the people. Mm-hmm. So what is that key ingredient you feel, or mix of ingredients that you have? It
is a mix. It's definitely a mix, because the entrepreneur that we're looking for, beyond making sure that we have chemistry with the entrepreneur and that there's a level of trust and transparency between his or her vision and her way of executing on that vision and our understanding of it, making sure that works. That's just, people, right? It's just connecting properly. But what we're looking for is basically an entrepreneur that has a vision, clearly understands what's under her control, clearly understands what's not under her control. And the reason why she understands that is because she has a very strong founder market fit. Therefore, there's a level of experience and depth of why what they're building matters and why they can succeed is because they have a vision of it, right? And a lot of people lack vision, and a lot of people lack execution behind a vision, of course. But vision is not just having an idea, having a dream, is basically painting a picture in the future of what it's going to look like, and then adapting with the changes that are not under your control. So if you're painting a picture that every single small retail store in the world should be agile and should be able to provide any type of product or service in their sector to any customer, online or offline, you need to paint that customer in the future. You need to look to see or imagine how that customer is going to be interacting with the product, how the engagement is going to be. Like, going into the details of a painted picture is hard. And when you have a real vision, you can actually paint it. And once you painted it, you can adapt your strategy as an entrepreneur and your product or service in order to constantly evolve towards achieving that vision, right? So we definitely look for that.
Yeah, you mentioned something I find interesting is the parts of the vision that stay solid, right? The future that you've painted, but then the way to get there adapts, and you have to be agile. How do you coach your entrepreneurs, or how do you feel the best entrepreneurs adapt to that? When do they stick to their guns, and when do they change their opinion based on data, based on the market?
You change your opinion because there's new factors, there's new elements that were unknown that are now known, and you have to change, right? So it's more an ability. So it's not something that we're teaching the entrepreneurs. We're basically looking for entrepreneurs that have that ability of having a vision and believing really hard in it, so that they're putting all of the passion, the effort, attracting the best talent, understanding what they have to do at which stages in order to get there, but smart enough to adapt. And I think that's where we lose a lot of entrepreneurs is pivot 1, pivot 2, pivot 3. There's no vision behind it. They're just good people trying and trying and trying and trying. So for me, it's not about trying, it's about figuring out what you know and what you don't know, and focus on what you control and adapt when you have new information.
In terms of what iNovia looks for in terms of other companies, right? Like, what's your investment thesis? Is it based on a specific set of technologies, markets? How do you approach your portfolio?
Well, we're deep into the future of work. We're deep into software differentiated hardware. We're looking at new verticals that are considered unsexy in the market, like, transportation and manufacturing. And why are we looking at it? Because we actually think that, data from a machine learning or AI front, mobility from a device front or a connectivity front is changing the way people can deploy their product, be more efficient, or increase their sales. And if this is basically across the board on all sectors, we should be smart enough to identify the sectors that haven't been disrupted yet, that are huge, that we should be going after. So we're not into the apps or the just doing something small. We're more in the platform plays, in the infrastructure play as well. So if you think of what AppDirect has built over the years, or what Vidyard is building in the video space, or what ClearPath Robotics is doing in the manless, driveless vehicles. These are the robotic space. These are sectors that are huge, that are disrupting multiple markets, and we're betting on that platform play. And we're betting that the team is going to constantly evolve in order to address the changes in the market at the same time, right? Mm-hmm. So we still do consumer. So, Luxury Retreats was a consumer play. Well.ca is a consumer play. We still do consumer. Snap Travel is one that we did recently. That's also in the consumer play. But we're doing it from a unique perspective where, okay, we understand the travel space pretty well. What does BuzzBud and Snap Travel have that nobody else has in terms of not only their vision, but how their vision of the user experience? So they're trying to change, same way Luxury Retreats was trying to change your experience as a consumer. But what differentiates them from a technical perspective that gives them a leg up on anybody else that wants to do it tomorrow morning, or any of the incumbents when they'll have the choice of acquiring or building from scratch? What does a BuzzBud or a Snap Travel have that will basically make that larger established company think twice before going heads to head with one of these two companies, right? So we put a lot of effort in building our thesis in different sectors, but also how things are evolving. Like from an AI or machine learning perspective, it's been a big buzz over the last 2 years. Well, wait a minute. On a practical basis, what does it mean? Well, it basically means that you have applied AI where companies are founded from scratch on a new algorithm, statistical approach to the software that they're building. Ross Technologies in the legal space is definitely one of the companies that we back in that took that approach. But there's also the AI-infused companies, which they started with a platform 3, 5, 7 years ago, and now are continuing to scale. But the amount of data that they have access to, the streams of data from their customers or from other sources, they should be able to grow even faster or better because of machine learning, right? So that's something that's interesting for us. So for us, it's not a question of trying to own AI. It's a question of making sure we have access to the talent in AI, that we have access to the expertise or knowledge that we can soundboard with, and that we can make sure that the entrepreneurs that are or will be AI infused have also that access. And of course, there's going to be the new companies that are just redefining, like back in the internet days when you saw the first few e-commerce companies. Well, they were defining a brave new world. Well, we're seeing the same thing. So we're trying to leverage those relationships.
Yeah. If I can summarize, if I may, it sounds like at a macro level, there's two areas. Is one, how technology has fundamentally disrupted the value chain, and you guys are looking at how that has impacted specific industries, and you're trying to invest in the underlying infrastructure behind it,
the platform play.
And then from the consumer side, it's what companies have figured out how to get closer to the customer
and engaged. Absolutely.
And being able to provide unique value. With that, let's say, framework, how do you then set priorities for iNovia? You sit back at the start of the year, how do you say, okay, this is what we're going to focus on for the next 12 months?
So our priorities are constantly changes, but they're focused on the portfolio. So, at the end of the day, as a venture capital fund, we succeed if our entrepreneurs succeed. So we have to be able to attract the best deal flow, yes. But let's not forget that we're an early stage fund right now. And early stage investment means that we do a lot of startups or a lot of young companies. Early stage is a phase. Value creation comes with scale. So how do we help, beyond putting in capital, our portfolio companies to basically grow? So it's all about growth, and that growth comes, yes, with the ability to attract the capital that is needed, but also to attract the talent that is needed. And talent is something that we built a whole practice on. We actually have a playbook on talent and people. We have Salima that's heading talent. We're starting to post a bit more content related to how to manage growth and manage and pull together the best talent possible in a company at different stages. She's releasing another blog soon related to exit preparedness from a HR perspective, because exit preparedness is part of a process as well. So what does it mean from a talent base? What does it mean from your HR base? So we're building different playbooks, talent being a key one, and growth being another one. Growth being from SaaS and metrics perspective. So there's a magic number. What does a magic number mean? Yes, but there's the LTV, but there's your CAC, but there's your wait a minute. How do we help guide our companies that were maybe 5, 10, 20 people when we first invested? They are now 200, 500, or 600 people, and make sure that as they grow, they understand what key metrics really matter for them and how they compare to the industry. Because part of the value that we bring to a portfolio company is hopefully our understanding of their business and their industry, and the ability to attract talent and attract the type of people that can provide a soundboarding for them to take better decisions. So be it, understanding what metrics matters at different stages, or how the whole market has evolved, and now it's less of a technology play and it's more of a market grab. And your blue ocean opportunity that was great with your strategy over the last year is now literally a red ocean, and everybody's undercutting everybody because too many players in the industry are dying or will die. You want to be the one backing the entrepreneur that won't die, that will succeed. So how do you help the entrepreneur get through that? So it's not a question of sitting back and saying, oh my God, now it's a red ocean, so the margins are being cut and everything. No, this is a cycle. A red ocean is never permanent. A red ocean means that there's a few that will come up strong, and there's a lot that will die or fold. So you want to be able to be the one providing the support to the company that will come out strong.
I think this is a great segue to talk about the industry and how you look at it. You mentioned how iNovia thinks about venture capital and the offer that you give to your companies. How do you see the future of venture capital, specifically when it comes to a provider of capital versus a provider of services? We're seeing some famous platform VCs in that space. And then as a second part question, we're also seeing the rise of these quant VCs like Correlation Ventures or Social Capital that are much more data-driven in their approach. I'd love to pick your brain on how you see that space unfolding. Yeah.
So everybody has a unique model, and that's what's great with venture, is that when you dig into it, and digging into the top tier. So if you look at the top tier VCs, each fund is different. You'll have one top-tier VC fund that has a $400 million, time after time, $400 million early-stage fund with a $1 billion top-up fund for growth. It's a model. You have certain investors that will be investing on pure, like you just said, pure data analysis. So they're going to be looking at only the financials and the metrics and take decision based not on management, not on the sector and everything else, just on the pure data, and take bets and basically put in, a lot of money. And that works if that's 100% your model. There's other funds that will overcapitalize companies. So by overcapitalizing them, they give them a heads up. Basically, they have more capital than the competition, therefore they can attract better talent. They have the resources for it. They can be more aggressive and start the red ocean instead of being forced into it. So there's some people that overcapitalize it. There's other people that basically will staff up and provide, like Andreessen Horowitz has like 50 or 70 people on staff just providing UI, UX, dev, algorithms, development, building, like engineers. So everybody has their different model. And what's important to notice between the top tier and the second tier in terms of returns for VCs, the second tiers are trying to be like somebody else. They're trying to copy somebody else's model. Same thing for companies, by the way. There's a nice correlation between performance of a fund and performance of a company. When you're a copycat versus when you're original, very, very different returns. So we, iNovia, we own our stuff. We are not a Silicon Valley fund. We are not a Quebec fund. We are a operator-led venture capital fund with deep expertise in how to build companies from scratch to growth. And we basically provide to the entrepreneurs that we back the insight, but also the support to get through the hard phases. So when we look at a company, of course we look at the data. Of course we look at the size of the market and if the market is growing or shrinking. Of course we compare them to the other top firms that we've seen elsewhere in North America. Of course we evaluate the talent base, and of course we look at the quality of the founders and the vision behind it. We have to. Why? Because we want to be part of their story. So if we're going to be part of their story, we better understand it. But we also recognize that we're not the ones operating the company. And we're not the ones facing the unknown time after time, week after week, quarter after quarter, the changes in the market, the changes in politics, the changes in economics, or the shifts in technology platforms, right? But what we do know is that we have access to the knowledge that we don't have. And the knowledge that we have, we use it to be the best possible soundboard to these entrepreneurs. So getting through the tough times is a roller coaster. And guess what? Even though it feels bad and it hurts right now, it's going to go back up, okay? It's just a question of addressing the challenges and prioritizing properly and understanding what you know and what you don't know. So we have our own model.
Yeah. I really like the analogy between VC performance and versus other companies' performance. I find that a very interesting corollary. What do you think's happening in the space, Chris, that no one is talking about right now? There's obviously everyone's talking about AI, everyone's talking about crypto.
Nobody's talking about. Everybody just lived through 1 year with Trump, plus a pre year for the elections and everything. Nobody's talking about what are the other countries going to do now. Like, we just went through 1 year of a very different political type of management in the U.S. And the U.S. remains the biggest partner to the world and the center of a lot of innovation. So we're not talking about what is Canada going to do going forward. How are they going to change their own policies? How is it going to affect business? How is it going to affect the economy? How is Asia, different countries in Asia, going to act and react mid to long term? Forget about reaction and just, Trump tweets something and media picks up on it. No. What does it really mean in 1, 2, 3 years from now? We've been on a 10-year positive cycle. Since the crash 2008, 2009, started picking back up in 2010, we're 2018 now. We're on the longest positive growth economic cycle in the history that we've been tracking over the last 50, 60 years, right? So what does it mean? Does it mean it's going to crash next year? Does it mean it's going to crash in 2020? Does it mean that we just changed the whole cycles and it doesn't crash anymore the same way? So there's a lot of, underlying deep impact things that we do not control as VCs, that our entrepreneurs don't control, but that we have to be aware of in order to be able to adjust, because when they're going to happen fast. And that means it will cause actions and reactions with regards to how you're growing your company, how you're raising funds, the valuations, the multiples, the burn. It will have huge impact. So that's on my mind, definitely, and we're having conversations, and that's something that, I don't hear enough people really talk about. Everybody is just stuck on the surface instead of understanding the net impact. The impact is not short term. It's in 2 years, 3 years, 5 years from now. So what does it mean?
Yeah, it's a very good point. Like, we're living through this longest cycle, as you said, and right now capital's cheap. Everyone seems to be able to raise capital pretty easily. But I find for you guys, if and when there is the next correction, probably be easier for your job, in the sense of the real entrepreneurs are going to still stick around. There'll be a lot less pretenders, let's say, in terms of people trying to start companies. Yeah,
and I think it's important to pace. It's like, your real venture is a 40, 50-year marathon. If you don't pace yourself, you'll hit a wall, you'll burn out, you'll crash, and you know that you're going to hit every possible scenario between now and 40 or 50 years from now. So stay calm, pace yourself. It's always a good time to invest when you're backing amazing people. Always.
So let's talk about one shiny object. What do you guys think about crypto tokens, and is iNovia considering looking at the space at all?
So we came out with our thesis on decentralization, which is a bit broader than just crypto tokens.
Todd that wrote that. Very good piece.
Yeah, and he followed up on additional parts to that piece, and is coming out with something additional soon. Decentralization is more impactful on a global front, so it actually impacts how products are being delivered, how people are engaging, and it's inclusive of crypto, in the sense that it's decentralization, and that's the whole purpose behind blockchain. It's just that we're not yet big fans of the currency itself. So be it a token or a Bitcoin or other, we're more interested in the platform plays, in how products and services are being delivered, and how companies, people, consumers, or bots are actually interacting with this type of decentralization. So yes, it's something that we've been digging in deep. We're just not part of the money, the currency side of it. We're dealing with our Canadian dollars, US dollars, and when we sell to an Asian, that currency exchange, and that's about it.
You won't accept in Bitcoin for now.
Hey, Bitcoin is great. If Bitcoin is great, if it's not, it's not.
I agree.
It won't affect our strategy.
I completely agree with you on this point. Like, the underlying tech is interesting, but the currency aspect right now is very speculative. It's kind of like the early days of the web. I was a bit young back then, but it's like you're going to see these, pets.com come up, right, with all these ICOs. But the real interesting stuff is yet to come.
Yeah. What I find interesting on the ICO front is more of a new version of what loyalty program looks like, right? So if you think of what Air Miles or Aeroplan or any other loyalty program looks like when it's multi-service, multi-product, multi-communities, how do you manage the transfers in between? How do you manage the value that's being built from a community front, as well as the value being built from a use front? So, just think of the Canadian Tire dollars, right? That was our first token, right? That was the first token out there. It was called Canadian Tire dollars, and they still exist. And they're digital now, so you can actually have your Canadian Tire digital tokens. And it forced you not to use your credit card because it was reducing the cost. So there's a purpose, right? Just that right now there's a lot of confusion and a lot of hype behind it. So
I agree. I want to go back now, kind of full circle, and ask you a more general question: how you've seen the investing landscape change and evolve. Like you said, back in the early days, you guys weren't able to cash, let's say, 40 or lead a $40 million round. How do you seen the space evolve with Canadian U.S. investors, and also notably the rise of the Caisse de dépôt acting almost like the SoftBank of Quebec to a certain extent?
So, La Caisse is playing a key role that I think many other institutions are going to follow, be it Canadian ones or foreign ones. La Caisse, like any other large institution, have capital to deploy, and that capital is being deployed today slightly differently than how it was deployed 10 or 20 years ago. It has to generate returns because it has a responsibility of generating, the best returns and managing their risk. But there's also the opportunity of playing a key role in the private markets and generate substantial value and not take, this level of risk that could have been considered for the same type of investment 10 years ago. So I do think La Caisse's strategy is a great strategy, and many others will be copying it for sure. La Caisse's strategy, though, follows a change that already occurred in the markets. So across Canada, if you look at the leading funds today, they are now operator-led, entrepreneur-led. But it's the same thing for the funds out of New York and the revivals of VC funds out of Boston. And it's been the case for decades in the Valley. Yeah, but turn to London and to Paris, and they're also changing, right? So capital right now is way more entrepreneurial than it's ever been. And I think that's a very good thing. It's creating value at different levels and at different stages, and it's basically fueling what is becoming a broader ecosystem of companies. Like when you think of the high growth companies today, you don't just think Silicon Valley anymore. Well, guess what? 15 years ago, it was only Silicon Valley. It's not anymore. And it's in Europe, it's in Asia, it's in Canada. Right? So these changes are important for the economy, when I'm thinking of my older days, for our pension funds, but also for us as VCs, because we're playing in that field right now. So. Yeah.
Chris, this has been an inspiring talk. I always feel like I learn so much every time I talk to you.
Thank you very much.
One final question. Where can people find out more about yourself or about iNovia if they want to stay in touch?
www.inovia.vc, so pretty easy, and our emails are our first name at inovia.vc, very easy to access. If somebody can't access us, then it's probably somebody that we don't want to talk to because they're not entrepreneurial enough to find us, right? And if they can't find us or contact us through a warm introduction, that's also a problem because we're looking for people that are savvy enough, that knows how to interact with their customers, with the talent, with their investors. So hopefully, it's not just cold emails and cold calls. It's actually a warm introduction. So that's how you can reach us.
Cool. Great advice. Thank you so much, Chris.
You're more than welcome. Thanks.
Thank you for listening to the Point of No Return podcast. Never miss an episode by clicking on the subscribe button on iTunes or Google Play.